This week I averaged down like a complete maniac and still beat my own bot by almost $2,500. Yes, human officially wins week 7. Welcome back to Man vs. Bot. Every week I show the raw truth. Real $59,000 account, no fake profits, and no fake Lambos. Verified trades on Kinfo, link in the channel description. Me, the hardcore manual trader who refuses to cut losers, versus Silverhawk, my emotionless LIFO scalping bot on Tesla. Let's jump straight in statistics. First, side-by-side results for week 7. My bot Silverhawk, $58,711.97 from $59,000. That is a loss of $288 from initial capital. Human, me, $61,437.22 from $59,000. That's a gain of $2,437.22. Human wins, but look at this chart. There is no real winner yet. The time is simply too short to compare now. What changed for the bot this week? Tesla dipped hard, closed around $401 to $402 end of February, and buying power got squeezed. Silverhawk switched to part-time mode, just selling covered calls on higher strikes instead of fast scalping. Now I will introduce new stats which I added to the dashboard. From this week, I will be showing advantages and disadvantages of LIFO and compare it with simple buy and hold strategy. Imagine buy and hold strategy. Tesla was bought firstly at $434.60 for $59,000. That's 135 shares. With current price $402.51, buy and hold investor will have $54,643.56 value now. It's a $4,356.44 loss. But Silverhawk scalps LIFO Tesla stocks and during last month earns $921 from premium and $1,114.26 from scalping profit, which total gives us $2,035.26 profit. Silverhawk acquired 145 shares, that is 10 shares more than buy and hold investor. And effective unit cost is about $412.93 per share instead of $434 in buy and hold scenario. Of course the time is too small, 1 month. But how do you think? These results would look after 1 year or more. Give the comments. Now manual side. Oh my god, I was wrong with my speculation and I was too greedy on Uber and Snap just few days before earnings. This was a typical amateur mistake. Please remember that mistake. Don't do any big moves just before earnings. I was too greedy for juicy premium, and look at a chart of Snap. Here I sold puts to grab nice premium before earnings. Remember, there is huge volatility and you should avoid making sells before earnings, or at least you should be aware that the price after earnings will skyrocket or drop like crazy, and you can stay with expensive shares like me. I speculated bullish, but look how it dropped. I started around 100 shares, sold 2 puts for $6.50 and $5.50, and boom! I was assigned and price tanked to $4.70. The premium I got did not cover the loss, so I started averaging down like crazy, and now I have 1,300 shares of Snap at $5.37. I average down because that's why I can lower CC for bigger premiums. But this is mathematically wrong. I'm fighting for recovery, not investing for gains. So let me summarize my insane strategy again, which somehow delivered 32% over the last 1 year. I call it hardcore DCA+CC on losers. The goal: crush the average cost basis with DCA, CC premium, and reinvest dividends of the biggest loser. Move to the next one only if it is the biggest loser now. Risky? Yes, very risky. Iron rule: never sell a covered call below cost basis. All premium funnels, dividends, straight into averaging the biggest loser. In my wallet, for now the biggest loser is Bank of America. Now I'm adding all money I have to it. Why it should be banned. There is no stop loss, no cut losers, huge drawdown risk, huge opportunity cost because losers locks capital in red positions. But in bull or mean reversion markets, it compounds like crazy 32% past year. Warning, this is extremely aggressive and can blow up an account. Not advice, just my live journal. Let me know in the comments, what do you think about it? Okay, let's jump now to the manual open positions snapshot. BAC, 165 shares, average around $53.17. Unrealized red, but lower strikes equals fatter premium now. Snap, over 1,300 shares, average to $5.37. Deep red, minus $283 unrealized. Premia tiny. Uber, 400 shares, average to $78.75. EQNR, 1 share at $29.83, and 2 puts for 200 shares which expire in the next 3 weeks. F, 200 shares average to $14.07. PCG, 1 share at $18.83. MSFT, 3 shares average to $402.65. Plans for Week 8. Keep averaging the biggest loser using money from dividends and premiums. Stay tuned. Could be rebound week or more pain. YouTube and X community. Our little tribe on Twitter at 05DTE and YouTube is slowly growing to 50 subscribers on YT and 36 on X. Thank you all for sticking around for the raw truth. Wins, epic no fake Lambo, no guru BS. If you're enjoying the real grind, drop a like, sub if you haven't, and comment. Links to Kinfo verification plus Twitter in channel description. This is not investment advice, only my personal $59,000 experiment. Trade responsibly or don't, just like me. See you next week.